Good morning, everyone. This morning, I want to talk to you a little presentation of the budget implications of the budget that was presented by His Excellency the President on the 7th of November 2025 in the Parliament for the year 2026 in his capacity as the Minister of Finance. So actually, the theme of the budget this year is beyond 2026. So I'm not looking from a political angle. I'm looking purely from an economic angle of this budget. Overall, what I can say is these are budget proposals. We do not know how many of these proposals will get implemented. But if these proposals are implemented, it's going to be a wonderful thing that's going to happen in this country. We know in the context of what happened in this country in 2022, when the country reached bankruptcy, there were certain reforms that were sort of worked out on the initiative of the previous regime. And thankfully, the present government is continuing the same policies, even though they have a lot of aspirations, doubts whether the new government that came into power in 2024 will continue the same policies. But it's happy to know they have followed up. And today, as Sri Lankans, we can be proud, even though we know that we are going through a lot of difficulty in our personal life. We can be proud that as a country, we have come up in a big way. A lot of other world countries are talking it's as a miracle Sri Lanka. From a situation in 2022 where we had petrol queues, gas queues, and all kinds of shortages, no currency, we have reached a situation where we have $6 billion in external reserves. An amazing result we have achieved. So this budget, which was presented by His Excellency the President Andrew Kumar Dissanayake on the 7th of November, is a continuation of the policies of the reforms that the country started in 2022, midway to after the bankruptcy. We have reached very good targets, and we are now on the right track where we can expect, if this continues 2026 and beyond, a better country for all of us, particularly for our children, our grandchildren, and for the business community as a whole. Sometimes we underestimate our country and we think Sri Lanka is not the best place. But I'll tell you, Sri Lanka is the best place to come and do business. Sri Lanka is the best place to live, provided we also, as citizens of this country, if we take our responsibilities well, we need to pay our taxes, which is due to the state. The state must manage those funds very carefully without going into corruption and wastage. And if all these things happen with the blessings of God, this country should be a paradise for our children to live in the years to come. So with that in mind, I thought I'll share you a few things of this budget. I'm going to share some slides with you all, hopefully, which will be very helpful for you to understand. So many of you all know I'm Kumar Fernando. I'm a fellow member of the Institute of Chartered Accountants and fellow member of the Institute of Cost and Management Accountant. And if you want any clarifications or if you want any kind of advice, you can contact me on 077 321 9387. 077 321 9387. So let me share my screen, and I have prepared some slides on this budget, which I'm going to share with you all now. So I presented these things in some of the forums, but I thought I'll discuss some of these things with y'all also. So let me start with the government revenue proposals for 2026. The government is expecting, as you can see in the slide, 5,300 Sri Lankan rupee billions in 2026. Now you might wonder whether these are achievable. I say it is achievable because by December 2025, we should be on target to achieve 5,100 billion Sri Lankan rupees. So in about another 40 days' time, we should be reaching that 5,100 billion. So it's about another 200 billion we are looking as 2026 target. So I think it's all right. We know that bulk of this revenue target came from vehicle imports last year. But this year, next year also, there will be similar vehicle imports coming up. So we could expect 5,300 billion. But the important thing for you to realize in this 5,300 billion, 23% of this is coming from your direct taxes, but we call income tax, corporate tax, etc. But you and I pay on the basis of our return submissions. But 58% of the revenue comes from VAT and sales taxes like VAT, SSCL. Those brings 58% or 3,056 billion is estimated from that one. So if you work out this as a ratio, it is, let me work it out and see. Income tax is about 28% and VAT and sales taxes about 72%. That's the ratio that we have. Direct taxes about 28% and VAT and sales taxes about 72%. The government plan is to reduce this gap slowly to 40-60 range. 40% from direct taxes and 60% from VAT and sales taxes. So the statistics or the proposals don't show that in that form. But let's hope the government, through these reforms, what they are doing, to the strengthening of income tax department or the IRD, they will be able to achieve this 40-60 ratio. At the moment, it looks as if 28 and 72 kind of ratio. And from external trade, from customs duty, etc., we are expecting 644 billion. So that's how the government. So we can see there's huge dependence on the taxes. So it's your responsibility, my responsibility to pay right taxes. It's not only paying the right taxes, for us to drive the government, direct the government to spend this money in a right way so that there's minimal corruption, zero corruption if ideal, and minimal wastage. So the IMF reforms have given a lot of strengthening for this bribery, etc., so that hopefully people will know these things and will abide by the laws of this country. No country can really go forward unless the government, unless the people also take the matter seriously, not to offer bribes. Pay your right taxes. Don't evade taxes, but plan your taxes well. So I'm going to talk about tax planning also a little bit today in this session, what we are going to look at. The next thing what I want to look at is the budget deficit. With the 5,300 billion revenue generation, there's a 1,757 billion rupees deficit. And the good thing what I see is in this budget, only 235 billion of that is coming from foreign borrowing. So we are reducing the dependence on foreign borrowings. And the balance part is coming from domestic borrowings, which will not have too much of a strain on our external reserves when it comes for the repayment. So probably we can expect a stable dollar if we continue with this policy of reducing the foreign borrowings and going more towards domestic borrowings. Ideally, we should reach a situation where we can manage with minimum deficit, but I think we are on the right path again. Now, if you look at the country's progress in 2025, what we have done, you can see the country has strengthened a lot. Reserves, as I said, when President Wickremesinghe took over the government, if I remember right, the reserves were just about $5 million. 5 million, not billion. Today, we have $6 billion. Actually, by the time he left office, he had almost 5.7 billion or something like that. And this present government has done well to increase the reserves, which should be given credit to the present regime also. And the government sincerely expects to regain pre-crisis stability by end of this year, within another 30, 40 days. And this is truly reflected, in 2022, we were declared a bankrupt country. Our credit ratings were down, Ds, triple Ds, etc. Now, slowly, we have picked up to triple C. And I'm sure if this sustainability continues, we will soon reach good ratings, Bs and Es, which will be good for the country. So, we can be proud of Sri Lanka in a way, from a total disastrous situation, what we have reached. Of course, every one of us have made a lot of sacrifices. Most of the subsidies were removed. We are paying the market price, cost-based structure for electricity, petroleum, etc. It was very hard for us, but people have got used to it now. The budget is talking about beyond stability towards 2026. So the budget has looked at many angles. If at all, if I want to be critical of the budget, one area what the government has not thought about is the environmental aspects of sustainability. As much as many countries are going for various things like doing various production areas, other countries are giving rebates for electric vehicles, etc. We have not been able to address so much of sustainability issues in the budget of 2026. But let's hope things will improve in the next year and so on. There's a lot of support for SMEs. I'll come to that one in a minute. Public debt below 90% of GDP by 2032. In fact, IMF target is 95%. But the government is very confident with their disciplined financial management that we can reach 90% of GDP by 2032. GDP growth over 7% over the next few years. And this modernization of SOEs, state-owned enterprises. And I think the biggest thing in this budget is this digitalization. We want to congratulate the government and Mr. Dr. Hans Vijay Surya for doing this massive project of digitalization. 15 billion digital economy. And every transaction will happen through digitalized platforms, leaving very little room for underhand transactions. Anti-money laundering legislations are to be strengthened. So these are good things that's going to happen in this country in 2026 and beyond. And if these things happen, you and I, we who want to pay our right taxes, live in a peaceful country with blessings, I think this is the right place for us to stay. So this is what I want to look at. Rural poverty eradication through infrastructure, education, and social protection. In fact, if you look at this budget very deeply, the president has gone into every area, including disabled people and, the less privileged people, everyone, and even National Export Development Plan. from 2025 to 2029. The government aims to achieve a sustained growth rate exceeding 7% within next few years. So this is the background for this budget and the future we can hope through this budget. So now let me discuss some of the revenue proposals for the president in his capacity as Minister of Finance brought in the budget. One is this enhanced capital allowances. We know at the moment, if you are doing a business, you can claim capital allowances on your property, plant and equipment. Plant and equipment at 20% per annum and buildings at 5% per annum. And we have this ECA, Enhanced Capital Allowance, of 200% in Northern Province and the other areas 100%, provided earlier we brought 3 million US dollars. Now the president has proposed to reduce that threshold to 250,000. So in other words, if you can find a partner who can bring 250,000 US dollars and start a project in Sri Lanka, you can get 100% capital allowance. If you buy a machine for 10 million, entire 10 million, you can claim it as a tax value. It's a big thing. It's a big incentive given. And 250,000 is about 75 million rupees. Not so much difficult. So it's your responsibility, my responsibility to develop this country, look at beyond the political parties and bring this country into its right status, what we all like to see in this country. Make it a Singapore. And I think if we do all these things, we can make it a Singapore. So these enhanced capital allowances. Earlier, only large-scale enterprises who could bring $3 million were able to get into this enhanced capital allowance. But this threshold being reduced to 250,000 makes it possible for SME enterprises to invest in assets, to increase productivity, and to claim tax relief, and to contribute towards the income. So we need to see what more structural support the government will give, like the BOI. We know it's a bit of a hassle to go through the BOI approvals, etc. So let's hope some of these things will be done. One of the key things what the president has proposed is from 1st of April 2026, the threshold for both the VAT and the SSCL, which are 60 million per annum or 5 million per month, is now reduced to 36 million. But that is 3 million per month. That is, in other words, 100,000 for a day. So almost every business will fall into this SSCL liability, 2.5%, and VAT liability of 18%. So we have to get ready, dear friends. We need to get ready from 1st of April. It's going to have a massive impact upon the way that you are going to do business. Now, many are arguing, saying it will increase the cost of living. I don't think so. It should not happen. Because if you go and buy a chocolate slab from Keels or Food City for 1,200 rupees, for example, my favorite, they pay 18.5% of that 1,200 to the IRDS VAT. But same chocolate you buy from a small boutique wayside, 1,200, he's not paying that VAT, 18.5%. So at the moment, it is his profit. And many of the products in Sri Lanka, we have the maximum retail price. So whether you buy from Keels or whether you buy from another pharmacy or any place, it's the same story. But the difference is, Keels Food City and other places, they pay that 18.5. That small Kade person doesn't pay. So now he'll have to pay 18%, plus the 2.5%, of course, that will go out of his profit. So he can't increase the price of 1,200. No. Now he need to get discipline. He need to ensure that when he gets 100,000 rupees sales for a day, 20,500 of that sale belongs to the government. He's only collecting on behalf of the government 18,000 rupees VAT, 2,500 he has to pay as his CCL. So only 79,500 is his real income. He should manage his cash flow with 79,500. What is happening at the moment? Many people don't think about the VAT liability. They get the 100,000 and they think, oh my goodness, I have a good profit. They go and buy vehicles, apartments, all that without realizing it is the government money which they have recovered from the consumer. Right? It's not they are not paying out of their own money. They are recovered from the consumer. They are using to buy vehicles and apartments and all that. This can't go on. So that's why the government has decided to bring a threshold down. And to strengthen this process, the government is introducing electronic invoicing. The first stage, all the exporters, but they are doing the pilot project now, all the invoices will be done through the electronic, digital invoicing. The moment you raise the invoice, the income tax department, your system, your file will get updated with that sale. So you can't play the game of having two sets of books and all that kind of thing. At the second stage, they want to introduce electronic invoicing for every VAT registered organization. So anyone who is making over more than 100,000 sale, they will have a point of sale system, the POS system, which will be linked to the income tax system. So the moment you raise, say if you go to a hotel and eat for 25,000 rupees, immediately that 25,000 will get recorded as your revenue of that hotel revenue, and he is liable for VAT. So earlier system of giving bills on approval sheets will have to go. We have to get discipline. Third stage, every organization, including the street vendor, will have a POS system, and they'll be directly linked to the income tax department. So tax department will know, are you exceeding the 3 million? Then they will say, hello, you need to get registered for VAT. So the government hopes to widen the VAT base, which is a good thing. Countries like Dubai, Singapore, that's how it happens. And I certainly believe very soon, maybe next year, they might even remove the threshold, or they might reduce it to 24 and bring it to 0. Every business will be registered for VAT purposes, and everyone will have a digital invoicing scheme. So we have to get ready. For so many years, we have been trying to evade taxes in many ways. But I think the era has now come. We should pay these taxes. And the government should be disciplined to spend money wisely, not to waste this money. I think to a great extent, we can see that example coming from the president himself, where his expenses have been very much curbed, which is a good thing for the country. I'm not talking politics, but the next leaders who should come should follow the same suit and keep up the things moving. I think this is where this country went wrong at one particular time. We were not disciplined in our financial management. But let's hope with this IMF, ADB, World Bank, keeping an eye on Sri Lanka economy, we will do these changes very soon. Then the other thing, when you get registered for VAT, that's a big advantage you have. When you buy things from other VAT registered suppliers, you can claim that 18% as an input tax. So when you buy chocolates from Ceylon Viscous Limited, they are a VAT registered company. When you pay 118,000 rupees to buy chocolates, the real cost will be only 100,000. That balance 18,000, you can claim it against your VAT you have to pay. Up to this point, because you are not VAT registered, your cost of chocolates is 118,000. It need not be so. It will be 100,000. So after 1st April, you must select your suppliers. Select the suppliers who are paying VAT. Buy from them. Then that 18% is not an expenditure for you. It's a cost for you. I mean, it's something that is an asset for you, which you can claim against the repayment, against the VAT payment. So that's why I say this proposal should not increase the cost of living. Opposition and some people may not agree with me, but if it is proper discipline, if it done in the proper disciplined way, this should not increase your cost of living. That's my personal thinking of this one. Then another thing that was done, this budget went in to see some of the disparities that were there between imported products and local products were removed. One area was this imported coconut oil and palm oil, because they were subject to this special commodity levy. Now that has been completely removed, and they also now, they had to pay SSCL 2.5%. So there was a significant gap between imported and locally manufactured coconut oil, palm oil, etc. and fabric. I'll come to that in a minute. Now, that concession is no longer there. So now they have to compete with the local manufacturer. They also will have to pay the same 2.5% and the VAT, because which they can claim it as an input. So that's another disparity that was removed in this budget, which will be effective from 1st of April 2026. One area where we may be slightly concerned is about SSCL levy on the vehicles. All this time it is levied at the point of sale, SSCL. It's 2.5%, but because it's a buying and selling, it's 50%, 1.25% we have to pay at the point of sale. Now, what it says is you have to pay at the point of import. So if you are importing a car, you have to pay 2.5% SSCL at the point of import. So I think the prices of vehicles will go up, because when you import, you have to pay that 2.5%. So the price of vehicles will go up by 2.5%. So a small vehicle up to 1000 cc, which is costing about 10 million, may go up by about 250,000. Big vehicles might go up by about 1 million. That, I think, will happen with this SSCL coming up. But with so many vehicles coming up, maybe because of the competition, the customer may not feel it, but surely, structurally, the prices should go up. So as I discussed, the VAT threshold has been reduced. So we have to get ready. And it's not only that, we need to remember, VAT is, you become VAT liable at the point of invoicing. So for example, if you invoice it on 1st of April 2026, you become liable for VAT on the 1st April 2026. You may be giving credit to the customer 60 days time. So that might have an impact upon the cash flow, because you have to pay VAT even before sometimes you collect the money. So that's a challenge that we have. So that's why I say the businesses need to rethink about their cash flows. Businesses need to rethink about from where they are going to purchase it. Because I would prefer to purchase from a VAT registered supplier for 118 and pay 118 because my cost is only 100. Rather than purchasing from an unregistered supplier where I pay 110. Even though I pay 110, I can't claim that input VAT. That means my cost is 110. So we have to re-strategize our procurements and supplies. Maybe our credit controls need to be strengthened to collect money on time. Maybe our finance people will need to work on the numbers very carefully so that we will not get into a cash flow issue. Very important. Now, we know from 1st October, there's no SWAT scheme. So everyone will have to pay VAT at the point of input, the exporters and export support services. And they have to claim it. They have to reclaim. So when you are trying to reclaim, the refunds are given on what we call risk-based refund system. Risk-based refund system. So the IRD will categorize you as a high risk, medium risk, or low risk. If you fall into low risk, you will get your refund after submission of the return within 45 days without any audit or anything. But if you are a high risk person, your refund, I don't know when you will get it. So we should not fall into that category of high risk. We should fall into the category of low risk. In other words, we must become blue-eyed boys of the tax department. How can we become blue-eyed boys? We need to send our returns on time. We need to pay taxes on time. We need to prepare our financial accounts complying with all the standards. Get it audited. Then we become good boys and good girls. Then we will be falling into the category of low risk. So it will happen not only for SWAT people, it will happen for all the people. The tax department is going to strengthen their audits. And you and I know if you go through that audit, it's a terrible thing for you. They'll ask 101 questions. Don't let them ask questions. Prepare your financial statements true and clean. Make it true and fair. Pay your taxes. Submit your returns. Abide by the laws. If you are paying more than rent 100,000, deduct the withholding tax. Deduct the withholding tax, 10%. And pay that to the IRD on time. If you are paying employees more than 150,000 rupees income, deduct the APIT. Pay it on time. If you are paying any consultant anything more than 100,000, deduct the 5%. Send it to the IRD. Submit the returns on time. If you get a capital gains, at the moment it is 10%. The government proposed it to increase to 15% for individuals. Not yet done. Pay it the following month. Then you become a good boy of the income tax. Or good girl. Then the chances of your accounts getting audited is very little. Because there are 12 million taxpayer files open up to last year of the Sri Lankan population. Remember, President Wickremesinghe said anyone over 18 years must open up a file. Even without you realizing, if you go to the IRD portal, you will see that you have a file. You may not need to pay taxes unless you have 1.2 million income last year, 1.8 million income this year. But you have a file. So in time to come with this digital NIC and all that, we all will be linked to the system. And if we can't account for our income, I'm telling you this very seriously, if you can't account for what has come into your bank account, because almost every transaction will come to the bank account. Because if you do any transaction for cash for more than 500,000, that will be totally disallowed for you. So if you are doing a corporate, 30% of that expenditure is disallowed for you, which is a big thing for you. If you pay your employees without deducting APIT, 30% that expenditure is disallowed. So you have paid the salaries also, and then you have to pay another 30% tax also on that one. You have paid the rent, and you have to pay 30% tax on the rent also, which is crazy. So we should know the law, and we should abide by the law. Do the right things. Country will be right. You will be right. And we all will be blessed. So this is what the government is planning and proposing to do. So remember, at one time the threshold was, I think, if I remember right, when this VAT was introduced, it was only 1.8 billion. But then it went up to 300 million during Mr. Gotabaya Rajapaksa's time. Totally unwanted kind of a thing, which brought that finance, the collapse of the system. Then Mr. Ranil Wickremesinghe reduced it to 60 million. And now President Dissanayaka has reduced it to 36 million. 9 million per quarter. That's your threshold. So by reducing the VAT, the government aims to increase tax revenue, minimize the price disparity between VAT liable and non-liable goods and services. I believe if this proposal goes through very well, the VAT rate of 18% will come down, probably to 15, 12, maybe 9. Again, the Singapore rate is 9%. We can reach that if everyone starts paying VAT. Then the cost of living will come down. Because today, few people are bearing the blunt of the taxes. But if it is spread in, your component of tax, my component of tax will come down. Remember, this VAT is not something the business is paying. VAT is something they are collecting from the consumer and paying. And therefore, they should be disciplined to give that money back to the government. It's a serious offense not to pay VAT. It's misappropriation of government funds. You can be sent to jail. We saw some of the directors of some of the companies being sent to jail for not paying VAT. We need to pay VAT. VAT is a consumption tax. Everyone bear the brunt of tax. And if we can reduce the rate, one day, sooner or later, your cost of living will come down. I'm sure the government will be looking at that very soon. So the budget aims gradually to shift that proportion between direct and indirect tax. So there will be more direct taxes coming up, 40% of direct taxes and 60% indirect taxes. Something which the government will be doing it, hoping to do it. So to collect that direct tax 40%, the government need to strengthen the tax administration. Everyone needs to submit their returns. And the returns should be properly done. So the auditors, the firms of chartered accountants have a huge responsibility. They should advise the clients not to evade taxes, but to plan taxes, but to abide by the laws of the country. And also on the fabrics, imported fabrics. All this time it was a cess of 100. So again, to take that disparity between, remove the disparity between local fabric owners and foreign imported fabric importers business, everyone is now liable for VAT from 1st April. So again, it is to ensure that the local man is not put into a disadvantage. So these are the proposals that the government brought. There was a little bit of a proposal that was something that was lobbied by the telecommunication authorities to do a slight change on the levy calculation to take into account the bad debts, both incurred and recovered. So there's a slight change in that thing. Customs duty rate, we know at the moment, the customs duty rates in Sri Lanka are totally complex. No one will be able to tell what's the rate. We can see a leading company like John Keel's having a problem with the customs duty on the BYD vehicles. So many vehicles still on the port without being cleared because there's a dispute. So President has promised to revise this thing and to make it a phase out para tariff to a revision of customs import duties. Let's hope things will be more clear, that everyone at the point of import will know real rate where to pay, whether it's 0%, 10%, 20%, or 30%. So let's hope these things will happen. Then the tax administration, as I said, they want to reduce the gap between indirect to direct from 75 to 20 to 60 to 40. Audit process will be improved. The tax department is going to have updated RAMIS 3.5 version. The audit cases will be based on transparent risk assessments conducted by a risk management unit. So no individual person in the department will have the power to decide what is to be audited or not to be audited, depending on the face of the person and or the underhand money that you can give. That era will be gone. Commissioner General will have power to even appoint a committee. The government is going to strengthen these anti-money laundering standards. You have to be very careful. When some person says, Machan, can I put some money into your account? Don't accept that money. You might be charged. If you cannot explain how you got that money, you will be charged in the high courts for anti-money laundering. So be careful and ensure that every cent that goes into your bank account, you can account for it. Declare, account for it. Pay taxes where you have to pay taxes. And do transactions as much as possible through digital platforms. Don't do underhand transactions. Because if the tax department comes to know, they will totally disallow all that kind of thing. So this is what the government is planning. So they are going to come up with this RAMIS system, updated RAMIS system, where everyone will be linked to the system. First stage, it will be exporters. Second stage, all VAT registered people. Third stage, every business, even a small vade kade, will have a point of sale system and invoicing through electric. So this is what the budget 2026, of course, it was a 4.5 hour long budget speech by the president. I summarized these things. So I'm Kumar Fernando. If you all want this presentation, the slides, you can send me a WhatsApp on 077 321 9387. 077 321 9387. I'll send you a copy of this, the slides if you want. If you want any advice or anything, you can contact me, consult me, 077 321 9387. Let's pay our taxes. Let's abide by the laws. And let's bring prosperity to our country. And let this be a better place for our children to live. God bless every one of you.